What's up, guys? I hope you're all doing well. So, as you might have noticed, in the past 1 week and a half, I wasn't really active. I didn't post any case studies, trade recaps, videos, thoughts, feedbacks, neither in community nor on social media such as Instagram or YouTube. And you know, the most important and the most uh, for me valid reason for that is that it's the end of the year, and I have a lot of university studies to do. So that's why I am not active, and I will not be uh, really active up to the end of the year. But whenever I have some time, of course, I will answer your questions. I will film the videos where I do some trade recaps, case studies, and all that. But just for now, I'm saying to you that so you will understand me to some extent, right? But yeah, in this video, I will go through euro versus dollar, and uh, I will explain the price action throughout the week, and most importantly, showcase the trades, namely three of them, that were, in my opinion, the most textbook looking setups. But since I don't really want to waste your time and my time, I will leave all the drawings as they are. So I will not draw the new ones because whenever I do that, I'm really slow. I'm, you know, doing that really long, and that's why the video may be 40 minutes. And for someone, it's too boring to watch a 30-minute video, so that's why I'll try and short that video. So yeah, let's get into that. As you can see, we're starting from US dollar on 4 hours for one simple reason. So you will see the structure in a better uh, fashion, let's say. As you can see, we're pretty bearish, and the structure, as I have said in my previous video, is really important because you don't know the structure, especially in the higher time frame. You then don't know the higher time frame intention. You can build your bias, and whenever you are getting into the entries, right, you may easily be caught on the wrong side of the market just because you don't really understand what the price wants to do from higher time frame perspective, right? So yeah, going into this week, the anticipation was that we will um, somewhat stop in going to the downside because we have this overextended bearish lag, and we actually bounced back pretty aggressively from if I'm not mistaken, this is daily zone, somewhat to the left, and the anticipation was to pull back. So ideally for me, the pullback should have been into the um, premium zone of the 4 hour bearish lag, right? But doesn't mean that it should do that. So that's why I have marked out some supply zones, as you can see. Um, these three were left unmitigated, even four of them. But as it is, that's not really important for us, right? With these highlighter points, I have marked out our structure, our swing points, which in case of a break of one of them, it would have meant that we were actually to change the character of the trend, which means that we might have started to look for some bullish price action, right? But yeah, as you can see, we have this for our supply zone, which is valid for the following reasons. So as you can see, um, oops. So as you can see, we broke the structure. Let me do this. Oops. That's right. We broke the structure to the downside, and the point where the move originated that broke the structure was this doji candle, which also is a inside bar candle, as you can see with this indicator. It means the range on the lower time frames. So we have our range initiation now, and then we anticipate, as I have said, mitigation and then a further continuation. Or we may see something like this, a little reaction, and then the price can go higher to fill this imbalance, to mitigate this supply, or even higher, to get into the premium zone and then go lower. But yeah, we don't marry our bias, we just simply react to what the price is showing us. So yeah, since we have our for our supply zone, let's then go to 15 minutes. And as I have said already, I will leave all these drawings here. And what we actually see here is um, structure with this line. So we see some impulsive um, movements to the downside. But then, since we tap into the daily zone, reject pretty aggressively, we have a 15-minute change of character, which is a first indication for me that we might now receive some bullish price action. And this is actually where the pullback stage started. So as you can see, we then respect the demand and the supply fails in here. So I will cover um, this long, this short, and this big short from here and from here. So yeah, these are the trades that I will cover in this video. And as you can see, we have this weak low. Why is this weak? Why is this low weak? Because we actually failed to break the 4-hour swing high, which was strong because it broke this point of structure, swing point low. Uh, so yeah, this block, um, this rectangle. Wait, yeah, this rectangle means a corrective price action. We don't really see a lot of imbalance there. We don't really see some impulsive moves there. They're rather corrective and more so ranging. And while these moves are created, the demand is respected, which means that demand chain is intact, and that means that we now create a sell side liquidity or internal range liquidity. And as you can see, when we hit our for our supply, we then have a big void that a big void of liquidity that we need to fill. So that's what the price then has done. Oops. price then has filled the void. Okay. Let's get into the first trade. As you can see, we have our 15-minute change of character, sweep of lows, sweep of highs. But in this point, the supply is still in control. It shows reaction, and this is only for liquidity purposes, accumulation of liquidity for then to sweep it. As you can see, we had this kind of zone of liquidity then that the price then has swept. But yeah, we can actually, I guess, use our replay bar mode to here and then go into 1 minute. So yeah, just because I didn't really say much about this order block, I will now explain why this valid. So as you can see, we have broken this point of structure, and then we have broken this supply here, and this is our supply to demand flip. Supply to demand flip happens only when supply or demand shows their reaction. Okay, so whenever the supply or demand doesn't show reaction, there is no demand or supply created. Okay, because there is no interaction between sellers and buyers. So that's why in this case the demand you think has popped up, or the supply that was newly created, it may be used for inducement. So yeah, pay attention to that. Don't get caught and don't be liquidity. So you may think that the initial order block is either this candle or this doji. But for me, it's not, because these candles, as you can see, and if we drop down to, let's say, 3 minutes, these candles didn't really take liquidity. It didn't take any liquidity. It didn't take any liquidity. And as we look, this is the so-called trendline liquidity or internal range liquidity. So the liquidity is resting below these lows, and that's why I went for our extreme order block that, if you look to the left, has taken a bunch of liquidity below these lows and then impulsively broke this point of structure. But this is better visible on on 1 minute, I guess. Let's see. Yep. So as you can see, we swept. Oops, my bad. We swept the liquidity below these lows, and then we broke the structure, or it is our so-called change of character. But I didn't really mark it out because it was really not necessary for me from 1 minute standpoint, because it was visible from 15 minutes standpoint, and that's why we then wait for price to retrace back, to fill this void of liquidity, to sweep these lows, and then we want to see some reaction. Okay. So as you can see, we retrace back to the zone. We aggressively react from the zone. We sweep the liquidity below these lows and the other lows. We then sweep the high. So this is our change of character done. We have this supply that has broken this point of structure. And as you can see, this is a valid supply to demand flip. Why? Because supply shows reaction with these candles. You see these wicks, they are rejections. So that means that there is a interaction between buyers and sellers. But this would be our decisional order block, right? But why is this order block not valid? Well, it didn't really sweep the liquidity. It only created the liquidity, as you can see, right? There is, even if we go down to 30 seconds, you will see that there is a trendline liquidity resting below these lows. There is no clear sweep of liquidity, so that's why we go for um, our extreme order block, and yeah, we simply wait for price to come back, and we put the buy limit order or uh, manually execute on the top. The target, we're looking for the target from higher time frame narrative or higher time frame standpoint, and the next unmitigated supply is this doji candle in here that was the origin of the move that broke this point of structure. So that's why my take profit will be at the equilibrium. I think it's somewhere equilibrium. So we then get back, and the price tags us in and then flies away. Let's go in 5 minutes. We have actually this buy side liquidity or trendline liquidity to sweep. So this is an additional confluence to our trade. And as you can see, we now in a retracement stage, we create some liquidity, and then as you can see, we have this candle, which is inside bar candle. It is an order block on 5 minutes, I guess. Yep, on 5 minutes that broke then this supply in here, right? You will probably wonder, why didn't I go for where is my brush, for this inside bar? Well, the reason to that is the pricing. So as you can see, I have this premium and discount zone, and this candle is in somewhat premium or even equilibrium. So these are the zones that we want to stay out of, because the price there is fair, and it can go either way from that point. So that's why I went for this order block that is completely in the discount zone. And as you can see, we then tap in, show an aggressive reaction. We have our change of character, supply to demand flip, and then price just goes up. And the thing is, right, even though we had our change of character here, supply to demand flip, the price doesn't really retrace back to the origin of the move or to somewhat decisional candle. Let's see what was on 15 seconds time frame. Well, the situation on 15 seconds is pretty much clear for me. Was there any reaction to this supply zone? Not really. It just blew off, and there was no reaction. So that means that there is no supply to demand flip. The supply to demand flip, as you can see, has happened in here. We have this supply that gets wicked with this wick, and we have this reaction, right? Oops, I'm sorry. And where did the move originate from? Well, the move originated from these candles. They're not clear on 15 seconds, but I'm still showcasing that this is the origin of the move. And just to prove that you got wicked, here's the wick that I mean, I don't have it. Okay. You see this wick has closed above this wick. So this is our origin of the move. So that means that we can now place our buy limit order on the top of that candle and the stop loss 1.5 and the same target. The same target as the previous one. And where is that? This is 1 to 20 RR and 1 to, let's make it 10 just for the sake of even numbers, and 1 to 10. And then let's play the price forward, and now we see that the price has actually came into the supply. So we now may anticipate some shorts price action, and for this reason we now go on 1 minute time frame, and let's study the price. As you can see, the price has showed some important for us reaction, because we have actually reacted pretty aggressively. Then we kind of ranged for a bit, and then we continued our aggressive reaction to the downside. But the thing that I have actually kind of spotted, is that the first reaction high from the supply and first reaction low from the demand are most of the times fake ones. So they will probably get swept out, because this is the inducement for the real reaction. And yeah, let's play the price forward a bit. As you can see, we now pretty aggressively got back into the zone. We sweep these highs, and then you want to see these lows get swept, so our chalk will be in place. As you can see, that happened, and then the price kind of aggressively reacts from the demand, but these reactions from the demand in this scenario are something that you can really capitalize on, but it is really important to understand that supply has took the control over right now. We are now in higher time frame supply. So 15-minute supply is stronger than 1 minute time frame supply demand or 5 minute time frame demand, right? So that's why it is risky to take these longs from these demand zones, but you can do that still. This will be a so-called hedge trade, and as I have said multiple times in my videos, these reactions are for one sake, to accumulate the liquidity. And as you can see, we now have this void of liquidity that needs to get filled, and we go back to the price action. We sweep this high, we create change of character, we sweep these highs too, we sweep these lows, we break this demand that is not really valid. We break this demand that is once again not really valid because it didn't really sweep the uh, liquidity and didn't mitigate anything important to us, unlike these demand that actually mitigated these candles, and these candles swept the liquidity in here and in here, right? So even though the price comes back pretty aggressively, we set our limit order from either 25% of Fibonacci or um, from the bottom, then you adjust the stop loss because the price doesn't need to go higher than that. You can adjust it to 2 pips just for the sake of spread, right? And the target for this one is the next unmitigated higher time frame demand, which is this one, because um, this high, this low, so is this low, they're weak because they failed to create a new higher high. So that's why the price reacts, sweeps liquidity once again, shows reaction to the demand for liquidity purposes, and then, as you can see, reacts from our demand and takes us out at 12.5, which means that we are now cumulatively up, if I'm not wrong, 53% something. I may be wrong, but yeah, it's something like, wait, let me check actually. Oh no, it's 20 plus 10 is 30. No, it's 43. My bad. Okay, so since we're now in 15-minute demand, we may look for some longs for one simple reason, because if you look on 15-minute time frame, right, we didn't really come to mitigate our 4-hour supply just yet. So that means that higher time frame demand may took a control over supply. So we still wait and anticipate the price to go higher, right? And then to sell off into the week low, right? Uh, so that's why we now wait. Let me make it a bit clearer. So that's why we now wait, and we actually mitigate this supply in here. This, I mean, this is a pretty big supply that you can refine to that week, but just to keep it simple, this is our supply. Why? Because this is a supply to demand flip. In this case, it's demand to supply flip. Why is it valid? Because we have this demand. The price has shown some reaction with these candles, and then it gets then broken, right? So that means that we now easily can take a sell trade into the 15-minute demand, right? Let's play the price forward, and yep, we now in a 15-minute time frame demand, and we are now gonna be looking for some long opportunities. And what we want to see a liquidation of sellers. We want to see a mitigation of a zone. We want to see a V-shaped recovery, which is a aggression. Okay, we then want to see a change of character in the flip, and as you can see, we have our excuse me, we have our liquidation of sellers in terms of this whip of liquidity above this low, and pretty much sure above another lows to the left. We then have mitigated our higher time frame demand, sorry. We then aggressively retrace back and show some reaction, and now we're waiting for some chalk. or change of character, and then flip, right? So um, for this specific reason, I will then go um, on 15 seconds time frame. As you can see, this one is really wrong supply, by the way. Wait a sec. So you can take this as supply, but I would rather take this little doji candle because this was the last candle before the momentum kicked in. And for some clarity, we go on 15 seconds. And as you can see, this demand to supply flip is valid for the following reasons. The price has shown reaction from the supply. As you can see, we have this multiple rejections and then we break the supply. But why is this not valid demand, this little candle? Because we didn't really sweep the liquidity, right? Uh, this candle that got mitigated right away swept the liquidity below this low, okay? So that's why it is really small, but it is a big detail that you need to pay attention to if you are trading the seconds time frames. You don't really need to, but if you're doing that, then uh, feel free to use this, okay? And as I have said multiple times, time doesn't know price, price doesn't know time. So that doesn't really matter what the sweep of liquidity, minor or major, is, right? So then we are actually hopping back on 1 minute, and we want to see a double confirmation because we are now kind of against the trend. We want to see a break of this wick, right? What the price then does is reacts pretty well from our newly created demand. We create some liquidity and we actually wick it, but the wick is really little. So we now can uh, put our buy limit order, or in this case, buy stop order, and the target of this trade is equilibrium of the next supply. That is actually our 4-hour time frame supply. And as you can see, I will play it on 15 minutes. The target will be hit in now. We hit our target, and yeah, we zoom out now. We are now up 16 plus 43, 59, right? At this point, it is somewhat 60 RR, right? And the anticipation right now is that we are in higher time frame supply, this inside bar candle, and we want to see a sell down, a potential sell down, okay? And yeah, why is this supply valid to me? Well, we have inside bar candle, which shows range before expansion. This candle, as you can see, has swept the liquidity below this highs, above these highs, and it actually mitigated this demand that broke the point to the left, right? So these are the things that you need to be focusing on while looking for setups, because whenever you are sitting on 1 minute time frame, you don't really understand the higher time frame picture because you don't really look at the higher time frame picture. So these are the confluences just for now for the bias, not for the trade itself. But yeah, since we came up into the 4-hour supply, we want now to see some 15-minute change of character just to be sure that we're actually going to see some selling side pressure or some shorts. So We now, as you can see, we have now our 15-minute chalk. It's really little, but it is a chalk. So let me make it this way. So as you can see, this wick closed above this wick, and now we need to have this wick swept. As you can see, we sweep this wick in here. Okay, so now we may wait for price to come back into this zone right here, and then we will be looking for some 1 minute time frame entries. So yeah. It is really late in the evening. I think it was about Asian session. So the price, as you can see, has started ranging, but we then actually, whenever we, oh my god, please hit our zone. Yep. So we now have hit our zone, so that's why we want to see some reaction. As you can see, we want to see these 5 things: reaction, mitigation, V-shape recovery, and then chalk and flip. Okay. In this case, we have our liquidation and a first part of chalk, change of character. We then see a mitigation of an important zone, which is 1 minute time frame supply, if I'm not wrong. So now we want to see somewhat reaction to this demand. Wait, I need to make a demand actually. Yep. And then we want to see V-shape recovery, chalk and flip, right? So we have pretty much these as aggressive rejection. We then have our supply to demand flip in this wick. Supply. And why is this valid? Because, I mean, we put it away a bit. We have actually showed some rejection in this wick, so that's why it is really important for us, and in this wick too, as you can see, a wick and inside bar. Okay, so now we actually may do this thing, and now we want to see the price return back into this order block. I mean, in this case, we can even put 1 minute stop loss, 1 pip stop loss, but it is not according to my trading plan. So just for the sake of the video, I will leave it there. Yeah, the take profit, as I have said, is the week low. Okay, and this is a 100 to 8 RR trade. So let's see whether it plays out. And as you can see, the 1 minute, I mean, what is called 1 pip stop loss was not enough. So that's why you need to make sure you are actually covering the order block. It's so hard. Is it 1 to 6? Let's make it 2 pips. And our risk to reward ratio is now 55, which is fine, absolutely fine. We are in a bit of drawdown, but then, as you can see, we show some great reaction once again, and let's see what the price then does. Let's make it 5 minutes because it's so long to watch. The price then ranges for a bit, and then it completely uh, melts. So in this point, whenever you have broken this point of structure, you may as well put the stop loss to break even. Okay, and now we want to play the reaction once again from this unmitigated demand that broke this point of structure, and actually put the price into the higher time frame supply. Okay, so the price moves shows reaction, and this is a next important part of this video. Once again, we show some reaction. Uh, we show some reaction in here from this demand, and then we break this demand. It will, yep. So up to this point, we just wicked the demand, but then as you can see, we have broken it completely with a candle body closure below it. So I don't think it's 1 minute time frame demand. Yeah, it is 1 minute time frame demand to supply flip. We have this full body candle that was engulfed by the bearish candle. So this is a valid candle for me. And why not any of these? Because they don't really sweep the liquidity. They're just simply building the liquidity. Okay. So yeah, let's now wait for the price to actually come into the supply we have marked out. And at this point, as you can see, I have actually put the limit order already. So this is something that you can do, but you need to try it out because sometimes you may be stopped out because this is a risky trade. Okay, because we have a lot of liquidity there, but yeah, it may go sometimes a bit higher, but in this case it didn't. So yeah, let's wait for the price to actually come into the supply. Okay, cool. So we didn't get taken out, but this is our risky entry, right? For the entry not to be risky, we want to see the following thing, as I have said, the following things rather. We have, by the way, built some liquidity on the way to the supply, and we have liquidated the highs or the early sellers. We have mitigated our 1 minute time frame supply. We have now a strong aggressive recovery. We now want to see some chalk and flip. Okay, so for this reason, I'm now going to 15 seconds time frame, and yep, this is where the the demand gets flipped, and we have our chalk. Chalk down and chalk up was, it was actually here, but I will put it here just because it is really a long way to go to the left. Chalk, nope, chalk up. Okay. And now we want to see price retrace into the 15 seconds supply zone, and then we want to sell it off from here. I hope this plays out, but according to my trading plan, 1.5 stop loss, and once again, it's so deep down. And this is our target, 62 RR. Beautiful trade. Let's see if it plays out. Let's get back on 1 minute. So we get filled perfectly, and then the price starts ranging, and then it goes down. So in this case, you could have even went for 1 pip stop loss, or even 0.7, which I don't really recommend, even though it looks cool, right? But it is really easy to get stopped out on 15 seconds time frame, okay? Because the price action is not really clear for everyone. So in this case, we now may as well go to 15-minute time frame and watch the price just melt. I mean, I know you saw that, but as you can see, the price melts, takes out the weak low, and this order block was actually valid to me because it swept the liquidity to the left, impulsive break. We have tons of inducement in form of equal highs, or more so trendline liquidity, right? So we may as well put the stop loss, a sell limit order. As you can see, the stop loss pip count looks kind of big from this point, like 3.1. 3.1, so that's why we may as well better wait for the price to come back in here, and then we will play the reaction. So let's see. Oh, wait, the reaction on 15 seconds. Oops. We get this away. We have this kind of big demand. And as you can see, the price has reacts from it, but then we have our chalk, change of character to the downside, and we have our change of character and liquidation to the upside. Mitigation of the 1 minute supply zone. We have as well a aggressive recovery, chalk and flip. So that's why we then may as well put the sell limit order. Let's see what in terms of liquidity we have here. For me, it looks like it is in liquidity here for them to sweep it. So it's our inducement, and if we look till the 15 seconds, will we see a clear? I mean, this is our extreme candle, and is, by the way, an inside bar candle, and it got then engulfed. So here we draw out our supply, and let's make the supply less. Oh my god. Come on. Load, please load. Okay, it's loaded. So now we can put our. I actually don't really like this wick. I mean, yeah, I think I will go for this wick just for the sake of being kind of in a safe place. We did minimize our stop loss to 2.5 from 3.1. Not a big, cut, but it is what it is. You know, may as well target this high. I mean this low. But actually, let's see if we get taken out, or we will see some create price action, and we have as well, as you can see now, mitigated this 1 minute demand, 1 minute demand in here perfectly. So this adds to our confidence that this low is now weak. Demand. Let's see. We even broke it, as I have said, but then let's skip it. 5. Oh, we get filled. May look like okay. We barely get. Oh, we get taken out. Okay, cool. So yeah, you can win them all. Actually, yep. I think it is what it did. It swept the liquidity. Wait, let me see. Yeah, it swept the liquidity above all these highs, and that's why it is better to wait for the sweep of liquidity above these highs and then to look for some change of character and the stuff that I was looking for. So yeah, we take this L, but we may as well look for a re-entry in here. I think this video is already above 40 minutes and is even 50 minutes. So yeah, I'm really sorry for making such a long video. I hope you will not get bored from it. And yeah, as you can see, there is a clear change of character. We have this candle as our extreme supply. We may as well put the sell limit order from the below of this candle and the stop loss just above, and we will not get taken out. So yeah, and then the price, as you can see, just melts. So yeah, is it actually? Will it melts? Nope. Okay, we're done for Friday price action just for now. Okay, and just to end this video, right, I will tell you some buys for the next week. As we actually failed to close below this high, so that means we actually grabbed some liquidity. So in this case, if we close below this low, we then may confirm that this is our break of structure, and we now may as well continue our bearish rundown. Okay, but if we from this point on will show some bullish price action, that means that the price will potentially head towards mitigating these supply zones, one of these, if not every single one of them. Okay, this is also a possibility. So yeah, this is something to pay attention to in the next week. But yeah, not to make this video for 1 hour exactly. I hope you like this video. This one is really long, but there is a lot of value. Okay, there is a lot of value to take for the future. And yeah, if you have any questions, please feel free to ask me. But pay attention that I am actually busy the next week. So if I'm not actually um, answering your questions or messages on time, please understand me because I can be in front of computer or with my phone 24/7. Okay. But yeah, I hope you liked this video and yeah, have a great weekend.